Hey, good morning, good morning. Welcome back to the stream, everybody. So gold is really interesting because yesterday, you know, we had this push up, but London session sold off. And it's kind of a similar thing happening here today. We had the push up and then London sessions again trying to sell off. It's like created a new significant lower low, just like we created significant lower low here and then price moved down. So this looks like even the daily yesterday closed bullish, but it kind of looks like it's weakening a bit. I'm probably gonna wait for sells, you know, somewhere below like 33.70 over there and buy somewhere above like 33.82 just to see what the direction is gonna be here in the day. Yeah, so let's see. I've been on 5 losing streaks, 0 to 2 trades a day. Just keep losing. I manage my risk, only be down 2.25% when risking 1%. Man, that's amazing risk management. That's really good. For 5 losing streak, you're doing pretty well. But yeah, I mean, the beginning of this month here is kind of like choppy as well. For me, probably up about 1% here on the month. So it's just like, yeah, we just have to get used to the way the market's going to be this month here. But let's see, you've been trading for a couple years now and having nothing to show for it. Been through ups and downs. Yes, sir. That's the journey. That is the journey. You must just keep showing up and trying something new every day that can maybe improve your trading a bit better. You know, if it's going to be like... I would say trading is a very visual thing. So you really want to be executing on ideas which for you, the concepts make sense. You know, for me, I love these consolidation plays. So make sure you go through the bootcamp and understand what the consolidation plays are all about. And then go through the simulations, because the simulations are really going to like nail those concepts in. You know, hopefully by the time you get to the simulations, you understand how the setup here is looking like. You know, you just have to understand the concept. Don't worry too much about getting it 1 for 1 or being exactly mechanically correct. Those are all like guidelines, right? But you must just understand the concept. I think it's most important than anything else. Because remember, the market's not a cookie cutter. So you just have to learn how to visualize these setups over here. So for example, like yesterday we had this beautiful sell over here, correct? Really nice. And then we also had one right over here, but it doesn't look exactly the same, but the concept's the same. And then price continued to come down. And then this is where we took our trade yesterday as well. This is where we took our third trade. And then price continued to move downwards. I think that was a really good one. It's a really good one. Nearly got stopped out. You know, we did have a retracement. Still respected that area. And then price came down. Today morning, I thought I could take a sell over here because the daily was bearish. And I was like, okay, so, you know, we're moving down. It's pre-London time. I want to see price move down. But yeah, it seems like we did get a, what is it, like 7 pip push, something like that. And then price started to roll back above. But then I reduced my risk. When I got the candlestick closed, then I just reduced my risk. The way we're supposed to reduce risk if it's not playing through nicely. Because it didn't even hit TP1. So I was like, okay, let me just reduce my risk. Because it wasn't giving me the follow through. From my journal, I'm taking counter bias trades leading to losses. Is there a video or will there be a video on how to identify bias? Yeah, there is videos on that. You know, the problem is you can't make just one video on it. It's because the different market conditions, correct? Like sometimes we're trending and it's very obvious. And then sometimes it's not obvious. So in a situation like this, for example, you see where we're getting pushes from the previous day and then price is just dumping the next day. Then we get the push up New York session and then price dumps during this time. So it's also about reading the sessions, you know, also formulating a buy. Sometimes you're going to see if you notice something repetitive happening over and over again like this, you can read the session and then somehow that also gives you an edge on what to expect. It's the same way when I trade my pre-NY session, I can have the daily candlestick be bullish and still take a sell. You know, because like during that pre-NY time, depending on how the setup forms and what direction we break. So if we break the highs or the lows of my consolidation, then usually I'm going to look at that for what it is. Maybe if we sell off and the daily is bullish, we have clean range here and the 5-minute, 15-minute ranges look clean. So the sells look clean. correct? So you're gonna be more happy to take a sell like that. And then you have other days where the daily is bullish, and then maybe you're getting a sell confirmation, but let's say you got a lot of like support areas here, and you know, and there are these different factors and variables which can affect whether you're gonna take it or not, right? So there's a few things that you have to consider when it comes to bias. But to keep it simple, if you want a simple solution, which most people can just like say, okay, you know, that makes sense, then I would say look at the daily time frame. You know, if the daily is bullish, let's say if the daily is up 0.40%, that's going to show you already there's a strong bias towards a direction. Correct? 0.40%. Keep that in mind, because most markets are going to trend or consolidate 0.20. You know, right now we don't have anything. 0.30%, also nothing. It's once we start hitting like 0.40 plus, that's when we're starting to see a little bit of movement. So that's like the simplest way that I can say this is going to be how you're going to trade with bias. So maybe on days like this, you're not going to take any trades. You're going to first wait for this number over here to come down towards like 0.40%. Then you're at least going to get some sense of where the daily direction is going to be heading to. And that's what I love to do. You know, like if we have, let's say, FOMC happen, and then the next day I come onto the charts and it's pre-London time, and I see this thing is up 0.40%, you know the bomber cloud is coming for the buys. There's a higher probability we're going to get runners for the buys than you're going to get for the sells. So it is really nice to get the daily trending. The problem with London session of late has not been giving us much bias. You know, that's a tricky thing. We've been trading what we call the trenches. You know, when there's no bias, you're trading the trenches. So if you don't know how to trade the trenches, then I think the best thing to do is just to sit on your hands and wait for volume to kick in. I passed my funded challenge first time ever. I'm happy, but at the same time I'm worried if I'm going to blow the account. You got what we call imposter syndrome. You're an imposter. You pass a funding challenge and you know you're not profitable, so now you have imposter syndrome. That's why I said, like, if you're not profitable, you're gonna know. And that's why I say people who ask for funding challenges, they're not profitable. If you need a giveaway for a funding challenge, you're not profitable. You're gonna have imposter syndrome. You might win it, but you're very soon gonna blow it. You might get a payout. You know, maybe luckily you might get a payout somehow by luck. But eventually that luck's gonna run out. Then you gotta go back to square one. And maybe this time you don't win a funding challenge, and then you gotta pay $100, $200. You gotta pay that 5 times and keep losing. And instead of taking that money and investing in your education, now you've donated it to the market. No, not even to the market. You've just donated it. Donated to a prop firm. That's all you've done. Even it's better if you donate to the market, because when you donate to the market, you learn something. You know, at least the market's going to tell you like, hey, listen, this is a losing trade because of X, Y, Z. But when you do a funded, it's just to do the funded. You're just thinking about a winning trade. You're just thinking, man, I got to get that payout. So obviously you're not going to learn anything from it. So it's really bad investment. See over here. Started about 1.5 ago. It's been a journey. Still got bad habits, closing early over trading, but learned so much from Vic. Changed my trading. Good habits are hard to do. So in my journey, I just try correct one by one. And these 2 bad habits are hard for me. Yes, man. Those are the most difficult ones. Over trading and closing early. This month I'm trying to hold trades. Over trading will help since I will have more opportunities. That's true. I don't care much about over trading for now since I manage well my risk. I think that's really good. My idea is to hold the trades that way. I don't need to trade so much. Yeah, I think so. I think if you're noticing a lot of your trades being running trades, then you wouldn't need to trade so much. Makes sense. You're just gonna leave the trade to run. I mean, I could theoretically do that. With my results, I could, in theory, just hold my trades. And I don't have to take the 2 or 3 trades a day. You know, we get some pretty significant runners over here. It usually hits like 2+ RR, you know? So, in theory, that would work. Or actually, it would work. As long as you have the data. So, you just gotta hold the trade. Gotta accept a winning trade, maybe become a losing trade, and then you just hold the trade. You know, because sometimes market's gonna test you, and then have the bomber clot. Yeah, I could do that. But you know, like once you start trading a big account, man, even these small moves, I always take the profit because for me, that's a good profit. Then I can secure this, and then I can pay some bills with this. You know, I can do something with it. Now, when you got a smaller account, then you're obviously gonna hold your trades a bit longer. You're gonna feel like you have to because it's not enough. Without increasing your risk. Hey, but good morning, guys. Good morning, Ellie, Ricardo. Welcome. See iPhone. Welcome to the group. You should put your real name here on Zoom if you can. Or you know, some kind of name. Morning, architect. Yeah, welcome, guys. Morning, Woods. Studies Corner. Welcome. Momar, J. Walker, Sandile. Let's go. Good morning, Nightbot. What's up, Derek? I think I see your chart over here. No, this is Doctor's chart. This is Dr. Dollar. Oh, just kidding. It's Mr. Doctor over here. Oh, looks like we got a fake out. So I'm waiting. I think today might be a bearish London session. That's what I'm waiting for. I'm waiting to see if market can start correcting this range here on the left-hand side. You know, we got a pretty good range here. It's like about 193 pips. Normally my TP is 1-to-1, sometimes less. I'm trying to set at 1-to-1 SL to B. I think, you know, the reason also your strategy is so quick in and out is because you don't trade necessarily with structure. When you do that thing that you do, there's no structure there. So there's always a chance the market comes back. Maybe that's why you struggle with a risk reward. Because there's always a chance the market comes back just to create some kind of structure and then move in your direction. But you see, I do the opposite. I wait for the structure first to say that, okay, I want the higher time frame to now move. You know, because typically what you're going to see, sometimes you're going to see like the higher time frame candlesticks pop up like this and they tap your level, they give you some profit. But remember, it's still bullish. It's still bullish. So it can come back, retest, and then maybe the next high time frame candle opens and does something like this. So that might be a limitation. So you can already study that. Study the ones which are running and the ones which are not, and then see how the HTFs are behaving. But that's what I think might be happening. Because, you know, the moves we catch, these moves are also like, as much as it's on the lower time frame, I'm also considering higher time frame moves when I take these sells. Because, you know, these sells, these setups, you can get the best stop losses, correct? Like really nice entries, but we're taking it in line with the overall context of the market. Although it seems like a short time frame, these moves come from these smaller areas too. So basically, I should invest in my own account even if it's small? Yes. Yeah, exactly. You have to first prove to yourself that you can pass a challenge and consistently make profit. Let's say even for a quarter. Even if you can prove to yourself you're profitable for even like 2 months or a quarter, that will give you a little bit more confidence once you do end up passing your challenge now to say, okay, you know, I've been profitable for the past 2 months. You know, I'm pretty confident. Then you can feel better about that. You know, but if you haven't even been profitable for, let's say, 2 months, you know, then you're just kind of like hoping to get lucky. And it's exactly what I did too. I did like 3 funding challenges. I blew them all. And actually, I blew the first one. Second one, I blew. Third one, I took my first trade, was a losing trade. I was like, fuck this. And I stopped trading it. Because, you know, we put them on a pedestal, right? So we want it to be as pristine as possible. We just want it to be passing them as clean as possible. So on my third attempt, I took a loss and I was just like, oh man, you know, this is not working. So I just stopped doing those. You know, unfortunately, I didn't get beginner's luck. A lot of people get beginner's luck in trading. But I always say, when God wants you to do something, he's going to make you do it correct. He's going to make it difficult for you. But when the devil is helping you, he's going to make it easy for you. So, you know, I think that's what typically happens to people when they pass a founding challenges for the first time. They get this kind of beginner's luck. It's the same thing you get at a casino, and that's the same thing that makes you over gamble, you know, and then you lose more money. So it's a good thing that I lost in the beginning. I always lost in the beginning. I never won. I never won. Getting my first withdrawal was so difficult. It took me months until I could see a withdrawal because I always lost from the get-go. You know, so I think there was a lesson in that. There's a lesson in that. It made me more cynical. And that cynical made me want to take things more seriously. You know, put some skin in the game. Some real skin in the game. Yeah, I'm a chicken with runners myself. Close way too early. Habit I need to get out of. Yeah, I mean, the funny thing about runners, it's all psychological, really. Because you know you have this problem. A lot of you are already profitable. You know exactly what problems you have. The problem is you're not doing anything to tackle that problem. Whether that's going to be holding the trade longer. All you got to do is hold. If you have a problem holding, and you don't even have to do anything but just hold. You know, what does that say about your psychology? It says you have a lot of anxiety. It says you have a lot of fear of missing out. You know, you're seeing P&L, you're focusing too much on the P&L. How about next time you take a trade, let's say if you take a buy like this, don't look at your terminal. Just look at this. Imagine that it's a video game and there's nothing to lose. You know, some of you guys, when you're playing Call of Duty and these games, you're jumping into areas like nobody's business, correct? And you know if you die, you're going to come back alive anyway. So just think about it like a video game. Think about it that you're just going to run out here. If you die, you're going to come back, correct? So just hold the trade. What difference does it make? At least if you hold the trade, you at least start to get some data on it. So if you got to see it like your trades are pushing a certain amount and then stopping you out, then you keep doing that over and over again and say, okay, so how far are we pushing? All right, so you know my risk to reward over here, my strategy seems to be pushing like, let's say a 1 to 2 and then reverses. So, you know, just keep doing that. Just get used to the feeling of holding. Don't even think about the money. You know, don't think about the money. Maybe you can say to yourself, in the beginning, just hold and just see when's a good time to break even. You know, because a lot of the time you're going to see like maybe even a 1.8 and you're going to be like, damn, that's so close. You know, that's so close. And then maybe for you, market can push that far, still retest your entries and then continue moving upwards. Then you can start gauging when to actually break even. But, you know, for me personally, I think like the closer you can get to your 1 to 2 is also a really good time to break even, the closer it gets to there. Because why would you let the market come so close to hitting your profit, come all the way down here for something so small? You know, also that doesn't make sense. But just start holding. The more you do it, the more better you get. The more better you get. It's always nice to have data. You know, I think that's what helps me a lot of the time. It's like, I know if I want to hold, I can hold. I can hold if I want to hold. You know, it's just like if my performance is not doing well, let's say right now it's the beginning of the month, so nothing serious. But let's say if this week ends and I'm at like a break even, next week I'm going to be thinking more of holding one of my trades and then try and get like a little bit more to compensate for last week. At least one of my trades, out of the 3 trades that I take every day, I'm just going to try and hold one. You know, and that's it. And then that can pick me up again. But I don't always need to hold. I always need to hold. It's about to break the support. Yeah, it's nice. I wanted to keep coming down here. Because, you know, with London, we got to be very careful because I want to see the market move. Remember, like yesterday, the market moved, and if I saw this now, then I could have said, okay, you know, sells. But you say I saw it later, so I took my shot for London, and I took my shot for pre-NY, which was also a sell. But at least the market had shown me the direction. So I was like, okay, let me just take my sell here. So today I want to wait as well because there's no direction yet. But it's incredible. A lot of you guys are already profitable. It's just like you have to just be honest and work on these things that you know are holding you back. Like a lot of us know what we need to do. We just don't do it. Yeah, the lowest part of your journey. I mean, that's also like opportunity for you to unlearn and start relearning. Because maybe what you've been doing is you've been learning too much. So when you learn too much, it's kind of like putting you at the bottom again. So you think you're going up, but you're inverting the scale. You know, you just put yourself at the bottom again. Because it's too much, too many ideas are floating in your head. So it's good opportunity, you know. Sometimes that's where you get your biggest breakthroughs because you've already made it to the top. Now you just have to sort of consolidate your information a bit better. Like, you know what you should do? You should send in a chart. If you send in a chart, I can almost immediately tell what kind of psychology you have just by your chart alone. I can just send me a chart over here in analysis or trades taken. It's so simple to say what kind of psychology somebody has. Because I've been through it. I've been through many groups. I've been through many ideas myself. So I do understand the journey and progression of how chart work can look like. Especially if you put like a little bit of labeling, or like you can give us your idea of what you think gold is going to do right now. And you use like one time frame even if you want. Yeah, I mean, something like this is a bit difficult to read. This just looks like a buy. It would be nice if you could somehow label it or give a little bit more information. But the perfect way is if you could label somehow like this, you know, then I could kind of like also understand a bit more. I've been trading Raja Bank's concepts. Okay, send me a chart. Let me see. Send me. If you've been trading his concepts, then I know exactly how that chart work should look. So let's see if you've been learning there. We must be honest with ourselves. It seems you have a lot of experience. May I know your age? Oh, I'm 29. I'm gonna train from work. Let me get back to you shortly. Okay, nice. Yeah, I think that's just gonna be the first step. Sometimes I still feel FOMO. If I'm in a sell and buy setup comes in, I will immediately close and buy at the same time. Oh man, the more I used to do that, the more whips I used to get. I used to get whips on both directions. Because what you're trying to do now, you're trying to outsmart the market. Remember, the market, if you're in a buy, it's going to show you a sell sometimes just to scare you out of your position. And when it shows you the sell, it's not showing you the sell so you can take the sell. It's showing you the sell so you can manage your risk. You know, you have to know the difference. If you're chasing to take the opposite trade, that means you're going to get whips on both directions. Never try to outsmart the market. Remember, your best trades are never giving you a hard time. So they should just keep going into profits. So if you see a sell set up, then you have to already consider what you're going to do with that trade to lose less and not take the opposite. Yeah, I did that once. I think the last time I did that was in the beginning. I think it was in the beginning of the year. I can't fully remember, or towards the end of last year. I remember it was a sell on gold, and then I got my reversal confirmation for the buy, and I thought I outsmart the market. I took the buy and I lost both positions. But guess what? The sell played out. I would have won the sell. You know, because the way the management on risk was, I wouldn't have reduced my stop loss on the sell because it pulled back a bit too much. So yeah, I would have won the sell. But you see, because I tried outsmarting the market, I lost both trades. It's like, let me give you a perfect example. Actually, even I can give you the most recent example over here, which was when I took this. Remember when I took this sell yesterday here, chat? I was making a video of this. I wanted to upload it on YouTube, but then for some reason my microphone was glitching. So the audio sounded terrible. I could only make a reel. So what happened here is we took a sell somewhere around here, and then our stop loss was above here. But in the video, I was explaining that there was a shotgun confirmation that happened right over here. And the candlestick was starting to re-break the highs. So, you know, there's a chance that price could come and take me out here by 33.58. But the thing is, like, we got to stick with our bias, because if we took a sell and we put our stop loss here, the reason our stop loss is here is to tell us that only if we break these highs, that price will have a probability, a better probability to move up bullish. So I was watching this little buy confirmation over here. And if I was trying to outsmart the market, I could have done something like this. Close out my trade in a bit of risk management over there. Instead of losing, let's say, 16 pips, I lose like 11 pips. And then take the buy, expecting price to continue moving up, thinking that I'm going to outsmart the market over here. Thinking that this is a fake out and that's going to be the rejection wicks. And then you see what happens. Now I've closed my profitable trade that could have survived for now this losing trade. You see? So the market here, it sometimes plays its tricks on you. Then you're like, damn. But the more you have a strategy and the more you understand your strategy, you kind of see these things happen over and over again. So next time it happens, you already know. But if you don't have that and you're in the journey right now, then obviously you're going to make a lot of mistakes. And you just have to figure that out. Resistance with clean range, left-hand side. Oh, yeah, this is exactly even the thing I explained to you, or explained right now, the shotgun entry. Let's see, 30-minute close above resistance, counter trend trade, needs resistance broken. Ooh, and it also broke these highs. Tricky one. This looked like a very aggressive liquidity grab because it even broke these highs. Remember the example I just showed you? We didn't even break those highs. But this looks like he was really gunning for those orders. But yeah, you took this on the 30-minute. And then price reversed. Could have been a trend situation. So what you can do is, for a simplified way of the bias, because now I see what the problem is, just use what I said about the 0.40%. I think that should at least start helping you a bit better. So if you can find trades within 0.40% on the daily, I think that should increase your probabilities. We took a buy last week on Thursday, I believe it was, and the daily was up 0.70%. You know, it was an aggressive entry. The London session just opened up, but price put me directly into drawdown. But guess what? Because we're trading with the daily volume, I survived that drawdown, and then price continued to move upwards. But in a different situation where I was counter trending, I probably would have gotten my SL hit. Yeah, you gotta be patient. That 0.40% tip is really good, but you have to be patient, because in a whole week, you know, you have to see when are we hitting that, because sometimes we hit it pre-London, London or New York. So of late, I've seen the London sessions been hovering here 0%, and the pre-sessions are maybe like 0.20, and then we're getting the higher ones usually coming in towards the end of the day. So that's also something to consider, because you're going to have day one like this, maybe day two similar, and then maybe going to have like maybe 1 or 2 days throughout the week if you're just focusing on one session. So you got to see which session is it, the one that is increasing in volume the most. Then maybe you can organize your time a little bit better. But of late, this is how I've been seeing it. Pre-London also has not been moving much. London has been at 0 and then picking up later. That's what I've been noticing. And that's why I really try to get as good as possible to trade the trenches if I see a little bit of a clear move. But for today, I don't see a clear move. So I'm gonna wait a bit longer here. Sells look good because 30-minute close below support. If it makes a nice wick and breaks the lows. Oh, here. Let's see. 30-minute. Yeah, right now it does look good. If you're taking it based off a 30-minute, then it does look good. Create a top wick, re-break of the lows to push down. You know, 50-minute is clean. 5-minute time frame is also clean. You don't have any sort of like resist. But this is not a 5-minute play though. This would be more of like a 15-minute. Yeah, about like a 15-minute play and above. So you'd be expecting from the 15-minute to continue to move downwards and fill that range. And you'd be down 0. I think 30% at that point, which is also really good. 0.30. It's a scared feeling, I think. The market's a scam, so I just try playing safe. Yeah, you gotta play it safe. Everything is a scam in life, you know. Business is a scam as well. If you're not a shark, you're gonna get eaten up. You know, think about opening a car dealership today. You're gonna get scammed. You're gonna pay high prices. Think about opening anything you're gonna get scammed. You don't know what you're doing. Life is all about, you know, it's all about becoming a shark. You have to really get good at whatever business it is that you do, because you are gonna get screwed. You get screwed in all the smallest of things, you know, like you go on holiday, you overpay for things you don't know. And it all just comes down to experience. You buy a car, you overpay for the car. You know, you didn't know how to check its value or bargain properly, so you overpaid. You know, it's all the same thing. It just comes down to experience. It's a reason why some people are successful and other people are not successful. That's really what it comes down to. Because, you know, for example, being a farmer is very difficult, you know. Like most farmers are successful because they have generations of farmers in their family. So they understand the way of the land. They understand how to do things. But, you know, that's because they have so much experience. You know, becoming a farmer is not easy. Very difficult. Well, you start off and you're on your own. Then, you know, you gotta go through all those trials and tribulations. I got friends in farming who've lost a lot of money. So, you know, like trading is like farming. What do you think of swing above 33.72? Oh, 33.72. It could also be a good play. You have about 55 pips over here. You got 55 pips over here. Yeah, trading's exactly. Let me elaborate on this. Trading is exactly like farming because of the different seasons that you have in the market. And you know, the thing about trading and farming, man, trading is like global warming. You know, it's like we're getting the worst conditions, the worst weather over here. You know, at least in real life, like weather patterns a bit more stable for a longer time. Man, trading, the weather changes daily. You know, so now you gotta see how your crops can survive here in this environment when you're getting volatile price action on every single day is a new opportunity for a shift in conditions in the market. And, you know, if you're not holding a journal, if you're not journaling your crops, you're not journaling, you know, the rainfall and the sun, then, you know, how are you going to have a successful, like, harvest? You know, like, because you need to be able to adapt. You got to see, okay, you know, it's maize planting season. So we're going to plant this maize over here. Then you say, oh, okay, now it's not maize planting season. We maybe have to manage our risk a little bit here. You know, we can still plant a little maize, but let's just manage our risk and think about maybe if there's anything else that we can plant, take advantage of this. Sometimes you can't. So you just have to weather the storm. You know, also it's not 100% hit rate when you're farming. So don't think 100% hit rate will exist here too. So you have to weather the storm sometimes as well. And then you see, maybe now I can switch up something, you know. That's why I have 3 plays I'm focusing on. Usually it's consolidation, swing, and shotgun. So those are my seeds, and that's what I'm planting here and seeing how can I have the best seed to plant in this condition. You know, you don't have to trade too much. You know, too much is bad for you. Too much is bad for you. Just like if you go to the gym and you're doing like 6 exercises for one muscle, you're going to have more efficiency doing maybe like 2 to 4 exercises, maybe like 2 to 3 exercises per muscle group. You know, you're not gonna do any more than that. Because now you're going into junk, you know, they call it junk volume, or maybe it's not as efficient. Let's just say it's not as efficient anymore. So in farming, you don't want to spread up. You don't want to spread yourself too thin. Correct. So you want to focus on what's working And just keep doing that. Keep repeating that. I kind of journaled this thing wrong over here. I don't know what this setup was. 0.48%. This is probably this is probably a swing because of how much percent that was. You can stream farming also, you know? Yeah, exactly. That's the same way people stream fishing. Now let this test 70 level again. Oh, remove today's trades? No, I've taken a trade today. I took a sell over here. Lost about 500 bucks, 600 bucks. Learn a lot from me. Thanks for the live stream. Welcome Studies Corner. Yeah, I'm profitable, but I'm not greedy. But when I'm closing 50 pips short of TP, it's annoying. Well, you can't catch the full move. You know, if you think you're going to catch the full move, you're also lying to yourself because you don't know exactly when the market's going to reverse. You just want a piece of the cake. Man, I've had, you know how many trades I've had run like 50 plus pips after securing, let's say 16 pips? But it doesn't bother me because, you know, at the end of the day, I'm focusing on a percentage gain. So if I can end the day with 2%, I'm quite happy. Anything like 2%. Because if your whole journey required you to be catching this move to be successful, then, you know, that's going to be short-lived. So if you miss a 50 plus pip banger, you know, that's just one situation. But if you're consistently taking a piece of this move every day, that's more consistent because you're going to have more winning days because most of the time the market doesn't do that extra extension, like just generally speaking. So you're going to have better like securing somewhere like some little piece of the cake like this. And you feel better about this too. Because you know you've secured something for the day and you don't have to deal with the additional risk. Because every time you have a trade on and whether it's in profit or anything, it's still risk that you're taking. You know, of losing the money because it's not realized gains. It's opened. So it's like, it also begs the question. It's like, if somebody, let me ask you something. If somebody, let's say, started with a $10,000 account, and then they made $20,000. You know, they've made $10,000, correct? Okay, so now let's say after he's made his 100% gain on the account, now he's saying has $20,000. Now he takes another trade and that trade goes up towards like, let's say $40,000. $40,000. Now, has he made $40,000? If he has not closed his position, has he made $40,000? He hasn't. So if that trade comes down to break even, has he lost anything? No, he hasn't. You know, yes, he did have $40,000 on the table, but that wasn't a realized gain. Oh, look at this. Prices moving up over here. That little swing entry model. But I'm still being patient. I'm still being patient with London sessions here. Yeah, but what do you think of the swing above? Yeah, that swing above here was, I think, see iPhone called out, or yeah, there was a swing above here. I think it was you. Yeah, so he hasn't lost any money. It's just a break even. That just blasted through entry. I missed it. Yeah, this was happening over here as well. It kind of confused me a bit because I didn't expect it to come up so quickly. It looked like it pushed up quite aggressively over there. It's playing out beautifully though. So I think that's what you're trying to do over here. See, iPhone. This was the trade idea. So you can see here now it's a winning trade. You took this on the 30-minute. Maybe now you can look and say, okay, you know, if it's playing out on the 5-minute a lot, maybe I'm going to focus on the 5-minute ones. You know, maybe these are things that you can look into your data, because you know the higher time frames will require a lot more of a push. And mind you, like you already have people in these other trades who've already made like 20 pips. You know, so the market is thinking about these guys. It's like, oh, okay, so these guys are already in profit. Whereas you might be sometimes coming a bit later because you're already getting on the higher time frame. So maybe you miss the smaller moves. And sometimes that's a little bit risky. It's a little risky to miss the smaller moves because the market's already paying people off. It's the same thing as yesterday's buy. I took my buy a bit later, but the ones who took it before me, they already got paid out, or at least I got an opportunity to manage their risk. And I spoke about this before taking the trade too. I said there's a daily flip happening right over here. That's going to be the hourly flip as well. But I felt a little bit more comfortable to wait a bit longer to break these highs. But these guys actually got paid out because I had a bit more of an extension to at least make some sort of either profit or manage risk. I got about like 13.5 pips. So when I saw that, I was like, damn, you know, this is now the drawdown coming in, possibly from these guys right here. So if I had just been a bit more aggressive, because usually when you take a position, you want to be 100% sure about the trade. So you don't mind being a bit aggressive sometimes. But you see, I wasn't 100% sure. I hesitated a bit. So what's happening for you is on the higher time frames, it could get a similar effect as a hesitation because the price has already moved up. But there might have been something already happening before that. So these are all like questions you really got to ask yourself. And you see, that's something someone can't teach you. You have to put that work in. So every time you take like a trade, you have to always go back and investigate that trade. Sweep Asia lows to push up, maybe. Let's see. Sweep Asia low. Oh, yeah, we did sweep Asia low over here. Sweep Asia low to move bullish. There's an Asia high up over here. So yeah, we just got to sweep. We just got to sweep. Let's try and change this color. I'm going to use this color. Dun, dun, dun. You know, just do it. Just do it. Like whenever you lose a trade, always investigate that trade. Maybe I need therapy instead of a course. You just need to take it easy, you know, just take it easy. Because, you know, you're going to get a mental illness if you're trying to do things that you can't control. You're going to go crazy. Because no one can control the market, you know, so we must just take it easy. Is something wrong with me? I've been trading 4 years now and I don't know, man, really struggling with it. Some people, I know a trader who took like 4 years too. I think it's that Tory Trades girl. She took like 4 years. And she had an uncle. And she had an uncle who was already profitable. Someone that you could sleep with them in the same house and wake up and, you know, go to training and that sort of thing on a day-to-day basis. And it still took her 4 years. So, you know, it's all in good. It's all in God's timing. Just make sure you're being as efficient as possible with your back testing, with your time on the chart, so you're not over trading. You know, you're trading maybe like 3 hours a day, and really just being a lot more efficient with it. Because you know, there's a difference. There's a difference, let's say, between, I always like using the gym as an analogy. I think it's pretty good. If you go, if you're lifting weights, right, and let's say you're not lifting to failure or like 2 to 1 sets to failure, you're not doing anything. you know, your muscles are not getting stimulated enough. Like if you want to get good gains, correct? Let's say if you're doing, let's say five sets to failure, correct? So this is how the curve is going to look. This is 5 sets to failure, 4 sets to failure, 3 sets to failure. Okay, maybe now we're going 2 sets, 1 set, and then 0. So let's say 5, 4, 3, 2, 1, 0. So this is where you want to be, correct? You want to be putting like a good amount of efficient work into your training. Because look, if you're just showing up and you're just stopping, let's say around this level, you see your progress actually diminishes by quite a lot. That's why I always say, whenever you take a trade, investigate it when it's still fresh. Journal it when it's still fresh, when the pressure is still on, because that's a tension that you need to build, you know, and then that's usually where the answers are going to be, correct? You know, Arnold Schwarzenegger said that this is where the champions are made. It's usually between this last rep over here to failure. Arnold Schwarzenegger said this. So, you know, it's the same thing for your mental in trading. So you always got to put pressure on it, because that's where you're going to get your breakthroughs. Otherwise, you know, this is all a waste of time. You know, then you're taking it too easy. There's nothing in life that's supposed to be that easy and then you get what you want. That's why it's hidden. Everything in life that's good is hidden on the other side. This is a side people don't venture into because it's hard. It's hard because it's more valuable. So most people are willing to stay here because it's the easy part. But you know, that's a part that sometimes it keeps you kind of stuck for a longer time. Sure, you can still make it here eventually, but it might take you a bit longer. My bias isn't bullish today. I think we calmed down before all-time high level. Like even yesterday, I was putting right after the stream. I always review my trades and I go back to it and say, could I have done something differently? You know, but also don't fall into the trap of doing things differently all the time, because you can't be 100% correct. You know, no one is perfect. You can't be perfect in the market, but just have a good balance between doing something differently and drastically changing your plan. Because some people think they're doing it to do something differently, but they actually just keep revising their plan over and over again. It's back to the drawing board. You know, that's the worst thing. Usually it's going back to a complete beginning. So you want to move correctly. You don't want to be going all the way back to the drawing board. You know, and it all starts with a good education. The same reason a lot of people, when they start gym, they think they're doing it correct until some doctor tells them they've been doing it wrong. And then they're like, damn, okay, so I thought this was correct. I thought this is how much protein I'm getting. I thought these were the exercises. Now you have to go back to the drawing board because you finally come across some new information which has told you that what you're doing might be wrong. You know, you haven't been moving correctly the whole time. Maybe you've been following these calisthenics guys who look really amazing and you thought maybe you're going to look like him because he looks awesome. So you're going to listen to what he has to say. Same thing like in trading. Hey, this guy over here has a Lamborghini. You know, I want a Lamborghini, so I'm going to follow this guy. But guess what? That guy is not teaching you as much value as you could have otherwise got from somebody who is more stable, someone who does research about these things, shows you scientific findings of these things, and have like a very good sort of like, you can usually tell the difference between a snake oils man, what do you call him, like a snake oil person who's trying to sell you something, but they might have the results, and someone who genuinely is giving you good information. So, you know, it comes down to your ability to do research and due diligence, which is a skill that you have to have in trading anyway. So, you know, I think that's something that it's gonna start from when you come into this industry. And that's why I personally love school, because school taught me how to do this research. You know, we're all super good at doing research in school when we're giving a task to do. If you can read and write, you can get a degree, right? Because you just have to do due diligence. You know where to find the information. But when it comes to trading, it's like we don't use those same skills that we learned in school, for example, and we're too easily swayed. But you should be able to tell the difference between what's good information and what's bad information. You know, so you have to see for yourself. You know, because everybody is a bit differently, so you just have to see for yourself. That's a psychology part that's hard to teach now. You know, because you can lead a horse to water, but you can't force it to drink. Vic, you've been to Amsterdam? No, I haven't. A lot of my friends studied in Amsterdam, though. I think I applied to Amsterdam once. I applied to Amsterdam. A lot of my friends were in Amsterdam. I applied to the UK. And I applied to South Africa. Because my grades were so shit, I couldn't get into these other ones. So I went to South Africa and I did a foundation year. And I think that was the best decision that I ever made. Because the weather was better. Everything about it was better than going to like Sussex. You know, Sussex in the UK. So I think, you know, everything happens for a reason, I'll say. So just trust the reasoning. You know, sometimes the universe is just nudging you in the right direction. You know, when you take a loss, you think you're getting unfair treatment by the market, but maybe it's what you need. You might want to win, but maybe you just need the loss for now. You know, you just need the character development before getting everything that you wanted. It doesn't mean that you're not going to get it. Maybe God's holding you back a little bit longer, so you're going to be ready when you do get it. What's my degree? I did a double major in you know, if you ask me that now, I've kind of even forgotten because I haven't used my degrees ever since I found profitability. But I did double major in international studies and international relations. And I also got a master's in anthropology. So I'm a very psychological guy, you know, I'm a very society driven individual. So I really do love to, yeah, that's what I do. You know, I'm good at research. I'm good at objective thinking. You know, I'm not somebody who's going to be very subjective about things, because, you know, when you do these things, especially these fields of like anthropology, you have to be as objective as possible and then tie that into some solid findings. You know, and that's the same sort of research skills that I think are quite applicable in the markets and in very many industries. But just much like a lot of people, I just did it to do it. Anybody can get a degree. It's as simple as just following rules. If you're good at following rules, why not get the degree? You're already given the answers. The answers are in your syllabus. It's what you've been learning the whole time. You know, so when it comes time to do the test, all you got to do is write down what you've been learning. It's really not that difficult. The difficult thing is running a business, is not having a syllabus. When you're learning to trade, there's no syllabus necessarily, correct? When you start a business, there's not a syllabus necessarily. There's a playbook. There's a way that you can do things, which can really make things very good for you. But at the same time, you have to be able to adapt, because a syllabus doesn't adapt. A syllabus stays the same way. But in the real world, you have to learn how to adapt. Think about all the taxi industries when Uber came out. All those people who were refusing to adapt and saying, oh, Uber is stealing my business. You know, Uber is stealing the business. It's stealing money from the country. Imagine all those people who could not adapt and just download the app. They could be making money. But, you know, they said, oh, I don't want to pay these fees. And then what happened was Uber took over and those local taxi companies were not making any money. So what they did was they all played the victim, you know. They all played the victim. When things don't go our way, we love to play the victim instead of adapting and taking advantage of what has changed. You know, that's a smarter way to think about things. Hey, Charlie, thank you for the sub. Anthropology is a very interesting field. Yeah, it's super interesting. I always say one of my anthropology teachers, she worked at CERN in Switzerland By the Hydro Collider over there, where they're trying to figure out the dark matter. Man, that's so cool. You meet really interesting people, and they don't do it for the money. You know, that's the difference about these people. It's not about the money. They purely love they love the fields that they're studying in, and they love what they do, and you know, they can really excel in it. And it's the same thing like in anything else in life. If you do it for the money, you're not going to go far. So you have to enjoy what you're doing to some extent. If you're trading just for the money, you're not going to go far. So you're gonna start to see certain trends in the market like in real life. You know, it's not all about just hitting buy and sell. But if you understand these foundational concepts, you see, this is all coming back down to foundations. If you understand these foundational things, then I think you're going to have a leg up on the other guy who doesn't. And that's the whole idea behind TFX concepts. You know, it's a very foundational approach to markets. So that's why you see right here, I don't have any analysis. I only got 2 lines. Maybe Asia high, Asia low, but we don't even need these lines, but at least it gives us some kind of bearing visually. But we're just watching markets. You see, we already got a swing entry model here that just played out. For anybody who took this buy, you know, like 41 pips stop loss, price moved up about like a 1-to-1 over here. It's already filled up the range. But you see, if you don't know, then you just don't know. But if you know, you know. So we've come up here to 33.76. So yeah, I'm not taking this. This is a beautiful little shotgun swing entry model. But for me, I've decided to be a bit more patient with the London sessions, just from what I've been journaling since July over here. But if this keeps happening over and over again, then we're going to go back to how we were normally trading in June, May, which was more of like just executing. But if it's not an easy trade for London, man, I really want to try and avoid it as much as possible. Like yesterday was not a super easy trade. I did take it, and guess what? It was a losing trade. But my previous 4 trades before that, 4 or 5 trades before that on London session, those were all easy trades, and those were winning trades. So you see, the moment I try and force something is always when I take a loss. Because it's a bit more dynamic. It's a bit more dynamic than the pre-London or pre-NY. Pre-London and pre-NY is really more directionally biased. One hour looks fine. Oh yeah, high class people, that's where value is. Money is a consequence, not gold. I wouldn't even say high class people, because you know, like a lot of these high class people also started with nothing. I would imagine, you know, it's all about like, it's intrinsic. You either sometimes have it or you don't. It's like is it his name not Mark Wahlberg, the guy from Shark Tank. He started off with a pizza joint. What's his name? Shark Tank. He said actors. Mark Cuban. Yeah, Mark Cuban. You say Mark Cuban's story as well. I think he started off with a pizza joint. It's a pizza joint he used to run. It's you know, these things are quite intrinsic. So high class, I think high class, it just sounds too bougie, you know, kind of pretentious. High class people already maybe have money, so it's easier for them to have or make more money. But it's really the ones who get it from the mud, you know. Someone has to get it from the mud. It just gets easier for the generations to come, but it's the initial guy who made the shift. And that's always getting from the mud. Mark Zuckerberg. Yeah, I don't like using Mark Zuckerberg so much. You know, that guy went to MIT or, you know, Harvard or something like that. Even Jeff Bezos' parents were pretty wealthy. Yeah, some of these guys also, like, they look like they started from the bottom, but they actually had some really good amount of help over there. Gautam Adani from India is one there. Yeah, Adani, pretty big family. That's the thing I've noticed about Indian families who acquire wealth. You know, they really keep that into their family. Like, it's very generational wealth. Whereas, you know, most different cultures, it's like a bit different. It's kind of like, this is mine, that's yours. You know, but Indians, I think Indians, I've noticed like Indians, also I know Pakistanis as well. I've also been noticing that quite a bit. You're gonna see this a lot. You know, they have these family-run businesses and that sort of thing, and sometimes they can all live in the same house, you know, and still have like a lot of money, living good lives. I think it's quite important to have generational wealth. You know, it's the way the upbringing is. It's like you have to do it. You know, whereas like first world countries are like, oh, you're gonna want to study art school, you know, you can go to New York, or you can go to Hollywood, or you can do whatever you want. That's the mentality, you know, like give them freedom. But in these other cultures, it's like you got to do this because this is what we do. You know, this is how we pay the bills. So I think it's a good thing. My roommate was also the same way. He was an Indian, and his dad owned a bank. But like he already had it all set up for him anyway, because, you know, right after uni, he's already going to have a job. He's going to have a good paying job, and that's going to be generational wealth. And I think that's more important because generational wealth is difficult. It's very difficult. A lot of people, they're always start from the beginning. You know, you have your parents, they raise you, you do the same thing, you raise your kid, and it's always like you're starting from the beginning. You know, there's nothing that's building upon anything because you're just working for somebody. You're always making somebody else rich. But if you lock in as a family, man, that's the ultimate thing. Because now you have people you trust. You know, you got people you trust who can run the business for you. You know, trust is a very difficult thing to find. You might even develop an empire, but who are you going to leave it to? You know, maybe your sons don't even know anything about what you do. So now what? You're going to give it to some random guy or some board of members? And then what? Then you got to start again in the next generations to come, because all that's just been fizzled out and the power has been shifted. Yeah, it happens to people if you're not careful. So I think something with trading is always an amazing thing, man. This is something that I know that I can share. At least it's knowledge. It's not a business, but it's knowledge, you know, and I think that in itself is very powerful. As Drake said, put my money in the grave. Yeah. When I die, put my money in the grave. Yeah, that's... Sure, Drake's gonna leave his son like some nice properties. Some royalties off his music as well. You know, some residual income. Yeah, at least his kid's gonna be set. You know, for a lot of people... Like it's so funny how celebrities, they're making like $50 million, and for a lot of people $50 million is like generational wealth. But a lot of celebrities can even blow this. They can blow this 50 million because they have no education. They didn't, you know, some of them, they didn't like actually build anything. Some of them get like imposter syndrome because, you know, they're kind of like industry plants. So when you're an industry plant, you rise quickly and you fall quickly. So you see, it's gradual progression. You gotta build that character, and you gotta move correctly. The most important part is if you're moving up, it's not just to move up. You know, you have to move correct, because if you don't have a correct foundation, then all of this can just come crumbling down quite quickly. So yeah, now like price is moving down here, 0.30%. Just gotta wait for it to break below 33.68. Then I'm gonna see what I can do here. What's the opposite of Gen wealth? Rich. You know, maybe you got a few supercars, you got a nice house, but any day it can be taken away from you. You gotta ask yourself, right? If you stop working today completely, how many years is your money gonna last you? Most rich people, I would say 15 years. On like a good budget and stuff like that, you know, not spending too much. Most rich people, 15 years. If they just completely stop working. So definitely not generational there. It's not a lot of time. 15 years can go by really fast. Like, yeah, I feel like it can go by really fast. Vic, what do you think of this now? It has come back down so soon. I don't think I would like a buy now. Oh, a buy here? No, definitely there's no buy. Because price is breaking below support. Yeah, I mean, this is what I've been noticing. The market is somehow wanting to push down. And if you look at the daily time frame, it looks like it's getting a bit exhausted over here. There's a bit of exhaustion on these daily candlesticks. If you notice how they're pushing with this kind of doji-like bodies, usually a doji like a body, it means price can retrace in the opposite direction. It's a similar thing I made in the video yesterday. I was speaking about this. I want to share with you guys, but it's like what I was saying in the video was the same thing as here. I was saying that you see how the shotgun play has played out here, but look, it hasn't given a follow through. It's like a doji kind of like a shotgun play. So that's already signaling to me some lack of volume. You see? And then that's what I was expecting as well with our stop loss above here. This was going to happen. Because we would have already lost the trade. Like this candle would have already moved up. But it didn't. Lack of volume, doji-like candlestick. Similar thing that's happening here on the daily time frame. You can see it. And you can feel it as well. Like since yesterday, people have been feeling that price on gold is going to move down. And you know, that's why I was say, like, trust that gut feeling. I mean, if it was to set up, I would still not like the buy. I think it wants to come down. Yes. Exactly. People feeling like it's going to come down. Man, one thing I've noticed about the chat is y'all are very intuitive. Like when it comes to directional biases, when it comes to news, when it comes to direction, the chat's actually very intuitive because you know it's something to do with feeling. You might not even be a profitable trader, but you just feel it. Right? You just feel it. Look at Discord, 1 out of 10 entry. She can do tarot readings. Yeah, exactly. I mean, that's a good point. If it tapped that line and shows some rejection, I'll close. But if it breaks the trend line, I'll hold this trade. Nice swing entry model, SL to BE. Close this trade, winning trade for you. Nice. Oh, nice. Yeah, that's a swing over there. All the way up towards that trend line too. I'm closing here. Beautiful. You see, you could have held a runner. Because remember we talked about this already? Remember we talked about this? You should see it. If you don't see it, then you just need to stick around a bit longer. But this is a very nice holding situation here. Is if you see that price, if it breaks below support, that it can keep moving down. And you see, we've already had trades like this before. So everything I teach, I apply. This is nothing new. Hi everyone, I'm back after a while since I had things to do. First trade of the week and it's already a win. Oh, nice. That's a nice way to come back into the market. It looks like you took the same sell over here as Ellie. It looks similar. Is it similar? Might be a different trade actually, but it looks similar. Oh, this is crazy over here. Wow, look at this. This is like we're driving a Tesla now. You know, we got all the tech in here. Minute 1 down, minute 5 down, minute 5 down, 15. You see, now this is just going to create problems again. But I understand. I think I understand what you're doing. H1, H4, daily up. Waiting for things to line up a bit better. Oh man, now you're trying to figure it out. This man is on a journey to figure out the markets. 100%. 100%. This is going to cause you a lot of stress. Unless you have a submarine and you can go and listen to the fiber optic cables in the ocean, then I don't think it's worth that stress. All right, we're down 0.30%. I still want to see a commitment here from the market. I want to see price continue to push a bit more. I would have loved to actually already start looking at some sells now, especially just the way it's coming. But damn, I just feel like I got trust issues with London session. I want this thing to commit to me that it wants to keep pushing, because you know we've already come down here once. Theoretically, we've been down here by 0.30 and then it came all the way back up. Now we're back down here again. Maybe it gives a bit more of a push and then it comes back up. More swings and sideways though. Yeah, it's also not fully set up. We can do a tarot reading. In the meantime, we can see today we have nothing. We don't have any news today. So let's say, you know, it's still crazy. Even after upgrading my GPU, this specific web page always slows down my computer. It's really weird. Will gold move down during the London session? Today. Now, actually. London session right now. Yeah, this web page here, it has some serious juju. It always makes my browser crash. Shuffling the deck. I can only be in here for a certain amount of time. Like right now it's still fine, but it's gonna start slowing down soon. So we gotta get our reading quick and get out of here. Thus, it seems gold may indeed trend downward during this session. The winds favor caution. Okay. The winds favor caution, but it seems gold may indeed trend down during this session. Now let's solidify that reading with a coin flip. So as always, heads is going to be buys, tails, sells. Probably land on tails. Oh, tails, look at this. So it's lining up again. All right, so we're going to see here. We're going to see what the hit rate was. It got the prediction correct for NFP. The both said buy for NFP. The coin flip and Zoli both said buy. Now they're both saying sell, which says that gold should move down. It's crazy how it lines up like that. I could imagine some kind of crazy guy has once gone to a tarot reading facility and gotten their tarots read about the market. I'm so sure that's happened. One degenerate out there has invested so much into something and they've gone to get their tarot read. Your new strat is Zoli? Yeah. See, it's doing a break and retest off that Asia low. Oh, we're coming down over here. This is really good. Oh man, 0.35. See, 20, 25, 26. All right, so that accumulation was actually looking really good. Yeah, I just took a sell over here. I just took a sell over here. I do like the progression. I do like the progression. All right, chat. Stop loss to break even here. Yeah, holy. Stop loss to break even. All right, chat. I'm securing right over here. Just a small little scalp. Yeah, just secured here at about, like, you know, 19, 18 pips. Good thing is, if you want to hold, it's a risk-free trade and you're sitting in a position here which could run. It could really run for you because you have really nice range on the left-hand side. You know, sometimes the important thing is just getting stuck in. At least you got a risk-free trade. Yeah, well, that was quick. I did like the way we were ejecting, you know, and we also created like a small little fake out situation over here too. So if you notice, price still accumulating over here, and then it broke. Nice little fake out, retest of Asia lows, because we were hanging out here for quite some time. So I was like, well, you know, this is actually gonna most likely hold for price to continue moving down because we didn't fake out. Like before, we faked out quite quickly, right? But this time we respected this area. We respected this zone, and then, you know, price moved down over there. So yeah, congratulations to anybody who's still, you know, holding this trade, or, you know, at least you got a pretty good position over here. Yeah, that was quick. That was quick. You know, that's sometimes the thing about trading is you just see it. When you see it, you know. But we don't know until you know, price creates that pattern for us. Because I wasn't expecting to take a trade here, to be honest with you. You know, like, it's just only looked good to me towards the tail end of it. So when you know, you know. That's just the thing. When you see your setup, you know it's a setup. That's the kind of trades that you want to be taking. The ones where you don't have to always like second guess yourself too much. You know, it's just you see it and you execute. So I think it's a pretty good trade here. Now I want to see if maybe price continues to push down for me. But you see where I took my profit? That's somewhere that I usually expect market to also have a reaction. It doesn't mean it's going to stop moving. It's just a profit taking area. Got some really nice range over here still. Look at this. Next time we might be getting that direction. Now the daily candlestick is down 0.40%. What do you anticipate for the weekly close? Weekly close? Oh, weekly close? I don't know. We have to wait because the weekly looks like a doji candle. But what I would anticipate, or what I was anticipating for this week, was price to move up. But what we're starting to see is prices having some sort of struggle over here to keep pushing up. Because the previous 2 days were closing like a doji candle with low volume. So I think, you know, maybe we can start moving down again. That's the kind of vibe I'm getting from price of late. That I think gold is actually a short this week. But it did have already a nice retracement. You know, so if you look at it from... Yeah, it did have already a nice... This is like... Okay, let's pull out the fib. You can see from here to here. Getting pretty close to that 65% mark. So it was a nice push to initially start. But we just got to be very cautious about these current conditions we're in right now. Which is... for some reason, if you put on your kill zones here, you can see prices somehow moving sideways a little bit. Correct? You got resistance up over here. You got support over here. It's not really trending. It's moving a little more sideways. You can see with the line graph a bit better. But just getting some small pushes here, small pushes here. But it's not really creating any sort of significant structure. It's going to be a hard month for me because the 30% I want to achieve is on the limited of my current lot size. With this lot size, I'm getting like normal profit, 100, 140 bucks. I will take 1 or 2 more today and I'm done. Lol, as you said, getting in is the hard part. Yeah, getting in is a hard part. True. Getting in is the hard part. What do I anticipate of GJ? GJ daily candlestick is pulling up right now. Got a support being formed, get a rebreak of the highs by 196.522, and then price can move up over here. GJ looks like it's consolidating as well. You got a support area here and you got a resistance over here. So I'm anticipating GJ is just gonna bounce off support and then continue to move upwards. That's gonna be the GJ bias. Beautiful accumulation here. You can see it's getting ready to have a distribution. So it's currently at a point A. So whatever you're gonna see next is coming outside of this zone. Whether that's gonna be a buy like this, which I think it's gonna be, it looks really good. Clean traffic here on the hourly too, looks very clean. Or whether that's gonna be a sell like that. But GJ is definitely at a bus stop right now. It's about to get a big move. A really good move. Goldie is still in the works. Still in the works to the downside. It's also breaking a pretty big accumulation. That's why I also like this trade, because I think there's a lot of volume that can come out of this area over here. Because, you know, you have like resistance, you got support. So it's also been at a point A for a while. So this should be the move. That should be the distribution now towards the downside. It could be a bumper clot. Could be a bumper clot. Most of these trades over here have been bumper clots. So, you know, you could have a bumper clot like this. You just gotta get the direction. You know, London just has to prove itself. It's gotta keep showing us direction, but it's doing that already. At least it's at 0.40% now. So it definitely is showing some direction. So you see how we did that here? C iPhone, how that helped me, that advice from earlier, how it helped me get this bias as well, to at least make me feel good about the trade. That I could just execute without hesitating too much. Because, you know, sometimes trading is, you can think about it as just being on the right side of the market. Like, sometimes you get your entry, but you just want to be on the right side of the market, correct? Because the market's going to move. It's going to move somewhere. So it's, you can think about it like that. You just try and get onto the right side. And if you think about it like that, it's 50-50, right? So that should actually alleviate some stress for you. It's 50-50 if you look at it in black and white, but when you're taking your trades, there's obviously a higher probability of a direction than not, right? That's why you execute on your entry confirmations. But if you look black and white, then, you know, you can think about it in terms of 50-50, because the market will move either up or down. So I think that should just psychologically alleviate some sort of stress. See, it will move eventually somewhere. See, it's just like this. Look, I'm going to journal this trade. And then I'm going to put it into my journal over here. And then we're going to be talking about this again next week. You know, it's just going to be repeating the same thing. So how many times do you need to see it? Oh, Walter saying thank you for the sub. Appreciate it.
Spartans!
With this $100, can I deposit or buy a prop firm? Not sure if I can pass it though. Yeah, I think buying a prop firm is not the best thing to do. Just trade the money. I mean, use the money wisely, but don't donate it to a prop firm. A trade deal with India remains up in the air. Trump will be looking to appoint a new Fed chairman. Current bias is neutral, cautious. Gold futures tick lower but keep near recent highs. Gold futures fall, though they keep near recent highs. Friday, weaker than expected U.S. jobs report. The non-farm payroll data heightened uncertainty around the Fed's monetary policy approach. Yeah, I mean, this is pretty crazy. We're already getting upwards of 80% for the rate cuts now in September. So might not get my October. See, we got the countdown on as well. 42 days to the next FOMC. Might not get my October prediction since the market has changed so drastically since that non-farm payroll data. Again, just like being a farmer, the weather has changed. You know, we had sunny skies to now stormy weather over here. See, it's easing here at 85.5%, which is pretty high. I would be surprised if Powell did not cut the rates. If he doesn't cut the rates, I think Trump is going to have a heart attack. You know, Trump looks like that guy who needs to take anger management, some kind of medication for his blood pressure. I think the guy's going to have a heart attack if Powell does not cut the rates this time. He's going to start shouting, turning red. He's like a fussy baby. But you know, I still don't, I somehow deep inside, I feel like Powell is not going to cut the rates. I don't know why. We've been so used to Powell not cutting rates that, man, if he doesn't cut the rates with an 85%, that's going to be comedy. Whatever is going to happen, the beef between Trump and Powell, that's going to come, that's going to be pure comedy. Accumulating on a 1 minute to move down again. Yeah, I think this would be something that it wants to do. It's a show. Powell and Trump are shaking hands and partying behind the curtains. I would say that a lot for politicians. I would agree with that. But, this is a bit of a different situation. Because like I think the reason Trump is doing it is because he also has some of his own personal agendas when it comes to markets. Like Trump has been really taking advantage of markets since he became president. So I think like for Trump, it's kind of holding him back from making a lot of money. So this one's a bit different. Because if you look at gold, for example, like I think markets are stagnating a bit because of these rate cuts. And when markets are stagnating, who's making money over here? These are the rich. The rich are making money when markets are moving, correct? So like if you have a lot of stagnation in the market, then the rich and those in power, they don't like that. They want to see volatility, they want to see volume, they want to see direction, and that's why we love Trump, because he moves the market and he understands this. That's what makes people money. It's when the market moves, not when it's consolidating. Because not everybody's scalping like the way we do. A lot of people are holding these positions on a much larger scale. So, it's kind of fortunate that we've been ranging here since April. Since April, we've just been stuck in this range. No direction. The stock market has been decent, I think, of late. Like, but I'm not sure about the direction. I don't trade stocks. But I do know that the market can definitely benefit off a rate cut. Like, that's going to move a lot of things around. Good that Trump is president. He's making gold move crazy. Yes. At least, at least his tariffs are giving gold a reason. Hey, Shalu. What GPU you get? 4070 Super RTX. Can't wait for Battlefield 6 to come out. That game looks amazing. They're bringing back the OG Battlefield, They tried this whole LGBTQ kind of designing for the other Battlefields. People didn't like them so much. They're just completely ruining things. Even Call of Duty, man, I'm so tired of Call of Duty, man. You got like SpongeBob skins and all this LGBTQ things going on. It's just ruining it. It ruins everything. It ruins movies. It ruins everything. So it's quite nice to see Battlefield at least is going back to its roots. So I think that game's going to be awesome. Battlefield 6. They've got Battle Royale coming as well. Yeah, you're ruining it. Stop ruining it. Why is Hollywood doing this, guys? I don't understand. It's like it's getting harder to make movies. Have you seen the new World of Wars? What is it called? The World of Wars movie with Ice Cube. Man, terrible directing. Terrible. This movie over here, I think it's World of Wars with, I think, was it Ice Cube? Oh, this guy? Yeah, Ice Cube. Man, this movie over here, it looks like the script was directed by if a 10-year-old would give you... If a 10-year-old is telling you a story about their day. You know, that's how the script reads. And the cutscenes look like PlayStation 1 cutscenes. And this is Universal Studio. And man, and Ice Cube's acting, I don't even want to get started on it. It looks like he never left this room. It looks like they made this movie during COVID and he just had his webcam on the whole time and he just did some few expressions here and there. Man, I don't know what's going on with Hollywood. It's a new agenda that they have. And you see this guy? Man, this guy has been having all the leading male roles. This guy over here, Pedro Pascal, has been having so many leading male roles, more than A-list celebrities. Like I'm talking about the Brad Pitts, you know, Leonardo DiCaprio in his prime. Like Hollywood is giving him so many roles. This guy is because he's fitting a certain agenda over there. Like if you see him during interviews, like he always asks to see women's nails and then compliments them on their nails, and he's kind of like, man, you know, it's Hollywood. It's a weird direction that they're going, and I'm not for it. I'm really just rewatching old movies. Like Vanilla Sky, for example. Just old movies are so much better. And now it's like, you know, it's something that's happening in video games now. It's the same agenda that they're trying to push slowly in video games. Pedro. Pedro is Daddy Yoda. Oh yeah, they call him the internet daddy. Talk that shit, Vic. Yeah, let me talk my shit. You know, I've always been one to not. I try not to censor myself. You know, I think just being honest is good, and you know. You gotta hurt some feelings. Some people don't like that kind of talk, but you know, it is what it is. You can't please everybody. Sometimes you have to call things like they are. You know, this is just things in my personal life. But obviously when it comes to trading, in trading we can't have any personal biases. We have to remain as objective and as humble with the process as possible. You know, so I think it's important because a lot of people, it takes them too long to understand that, let's say if the market shifts, it takes them too long to understand this, you know, and they keep fighting against that and they keep losing and losing and losing. So in the market, you must remain flexible. But in real life, when it comes to these things, which are just ruining it, yeah, I gotta say something. Something's off about that guy. Watch him have a scandal like Diddy in the future. Yes. You know, he's a perfect example of an industry plant, that guy. And you know, this whole thing that's making people love him so much, it's going to be his downfall as well. Because when somebody rises to fame that fast and that quickly, and what he's doing is obviously, you know, he has a lot of his own political thoughts and stuff, which can sometimes mess actors up, you know. That's gonna come crashing down, like really bad. So that's why I think it's gonna happen. That's gonna happen to him. You know, the funny thing is, I made these predictions of traders as well. So it's something that I kind of like to do in my spare time. I always kind of think about these things, and I've been right about a lot of my predictions. I don't share them a lot on stream because I don't like to mention names. But I've had a lot of predictions about people who do a certain thing and then they change that thing later on. Because it's like, you know, what they're doing, I know is not sustainable. Because I've been through that same process. Through all those same processes, it's not sustainable. Obviously, I'm not going to mention any names, but it's an amazing feeling to see it play out in real life. I made a lot of predictions. Even during the COVID time, I made a lot of predictions about COVID. I got a lot of arguments with people about COVID. You know, and when it happens, you just keep quiet. When it actually comes to fruition. You know, and that's the thing I've noticed about life is like most people, they're not willing to listen. You know, they're too arrogant. Because like, if you're gonna have a discussion with somebody, at least be able to listen and take some few pointers and say, okay, you know, that makes sense, and then respond to that in a way you're actually responding to it, with actually hearing and not just to reply and say something back. You know, these are all skills I think we can learn that also will always reflect on our trading. And you know, it's just that objectivity. Because if you don't have that in the market, you know, you won't be able to see these are the bigger plays behind the curtains if you're not able to always have like a much bigger picture in your head. You know, you're gonna be always too zoomed in on the details that you're missing the bigger picture. And I think sometimes the bigger picture is what really helps drive a lot of your concept, whatever it is you're learning in the market. It helps drive all of that. Like, it gives some kind of direction in a sense, if that makes sense. You know, basically, let me put it this way. When I started trading the 1 minute time frames, I noticed that these moves have big moves, yeah? But then it was only given more value when I could understand the bigger picture. The problem is a lot of people are too focused on the lower time frames, whether it's a 1 minute time frame or the 5 minute time frame, that they're missing the bigger picture. And I'm saying this from experience. When I started trading, I was also trying to master 5 minute time frames, but I was missing always the bigger picture. Remember I told you, chat, how I bought my first course? I took a 5 minute sell into a 4 hour support level, and my mentor had taken a buy off of that level, and I had no idea about the higher time frames. But you know, it's just all about in life. In life, you're always at a certain level. So I'm looking at my psychology back then to what my psychology is right now. And I can't blame myself for all the mistakes that I did back then. It's just simply because I didn't know. You know, but the important thing is you're always working to push your limits a bit more and more and more and more and more every single day. So you get that XP. But you can only do that if you're willing to fail. You're not going to be able to move from here to here if you're looking for a linear sort of like journey. You have to be willing to fail. That's the only way you can see the top, right? You can't spell a million without a few L's. So just, you know, be okay to take that trade. Be okay to take that loss, because at least you learn something from it. If I didn't take this trade, then let's say if I'm trying to be profitable, then I didn't take this trade and it just happened. It's harder to learn from things in hindsight because you had no skin in the game. It's a different feeling when you actually had some skin in the game. Completely different feeling. Small rejection off the 4 hour support. SMA is my last hope to not beat E on my second half. Is anybody still holding this trade? Just peaked down about like 33 pips. Yesterday price already down 0.70%, but in pre-NY price just go up insane. I think yesterday we had some news come out. This might have been... Didn't we have ISM? Yeah, we got ISM services. Looks like we've got negative numbers over here. So negative numbers on gold. I mean on dollar. So gold should have gone up. So I think it makes sense. Why do people always call you crazy? What's that thing Kanye West says? Call him crazy in a world full of lies. Oh, because when you talk truth in a world full of lies, why do people call you crazy? Because I say the truth in a world full of lies. I was called crazy so many times. You're not gonna do it. Still holding. Nice. Yeah, I think for me it made sense, you know. It's like there's so much range here. So much range here on the higher time frame. Why is gold fighting it? You see how it's kind of fighting it here on the 15-minute? It's kind of fighting like it wants to create some structure. But the other time frames, it's so good if price just comes down. And we're already down 0.40%. Kiss of death for the win. Oh, yes. Let's see, 5-minute kiss of death. Other time frames look good. Look at how it's consolidating here. It needs to break these lows to continue moving down. Because that's giving a warning, basically. It's giving a warning to the sellers over here. It's consolidating. So if it breaks above that high again, it could possibly have a deeper retracement upwards. If it breaks above 33.67. So best case scenario is respect those highs. Re-break these lows. Re-entry, bro, please. Please stop spamming the chat, sir. Like, come on. Head and shoulders on the 1. Bayo sale. No Bayo sale here, sir. But head and shoulders on the 1, kind of. We might have one over here. So you got left shoulder, head, right shoulder. Potential dump. If it did not have that support, I'll consider a swing buy. Oh, okay. Yeah, we got a support over here. That's now become resistance. Oh, what do you mean? I think that's... Oh, yeah. Yeah, okay, that's it. It's the most annoying type of structure because it's like a doji. So you don't even know if it's a real resistance. Because, you know, some brokers are going to close here bearish. And then it could, you know, it still looks like, it still gives you that sort of support feeling. Even if it closes bearish. So it creates like some kind of inconsistency there. Doesn't look nice. I just ignore those to be closers for me. Continuation. Okay. Yeah, it'll be nice. Like, even like something like this. It's still fine like this, I guess. I guess if it doesn't close bullish, but it has to at least close with some kind of volume like this. Because when it's so thin, it could be the more probability for bullish on some brokers. Then it actually creates a resistance. Well, yeah, like something like this is fine. But the ranges have been nicely corrected here today, huh? We got like a support level being corrected here. We got another break over here. That also had a nice swing up, nice swing down. So we're getting really nice volume. Candlesticks are printing nice. I'm considering to add to the trade if we close below the 5-minute structure. Oh, right here. 33.64. SMA is catching up. 8 SMA is catching up a bit more. Getting another kiss of death right on top of this candle over here. Ooh, that's a nice kiss of death. That's a really nice one. Vic, did you know that the directors of The Matrix are no longer the Wachowski brothers, but are now the Wachowski sisters? Oh, that's one hell of a contract. No way. Wachowski. Yeah, that's Hollywood is one hell of a drug. As Dave Chappelle, cocaine is one hell of a drug. You're telling me this guy? No way. Oh, what's going on here? Got a fake out. How the Matrix, they created the Matrix movie. That is crazy. Yeah, it's like always surprising. You know, we also got Juno over here. Man, I think even Juno would be a nice Ellie, to be honest. She could have played Ellie in The Last of Us, right, chat? Like, she kind of had Ellie vibes back in the days. This actor. But now she's also transitioned. Crazy, 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 crazy. And we also got I think that Twilight actor. Man, I would not be surprised as Twilight actor over here transitioned too. I think she's already on the other side of the fence, but man, insane what's going on. Insane. I think sometimes it looks too good. I need to get some liquidity soon. It's probably just getting like a few more orders in here before it has its continuation. But we're definitely cooking something. Gold is definitely cooking something here. Whatever we see is going to come out from this spot. Actually, let's see what GJ's been doing. Oh, GJ is not yet moving. But this hourly time frame, that's going to take some time for that to play out. But on gold, this is cooking something here. The next move is, I think what I'm expecting it is going to be a huge bearish move. Continuation towards the downside. So I think that actually looks really nice. For gold sell continuation. If the next move then... Actually, you know what, Chad? I think Zoli already got this one. But he said if the next move is indeed a major move down, then we can plus one Zoli and coin flip again. Yeah, I feel like Zoli's already got it because now we were down 0.45%. It was definitely right. Zoli was right. So, you know, we got our cards red over here, guys. And you can see Zoli here had the right... We had all the confluences today. From the technicals to the spiritual realms of Zoli. You know, we had Asia session lows, coin flip set sells, Zoli set sells. We got our confirmation structure, took the entry at the break of the lows. So let's give Zoli here another W. We have to say Gulag predictions. Bearish gold during London Open. And then we're going to put a tick over here. But trust, if we were already doing this earlier on, you would actually tend to see that this thing does have some weird confluence. Obviously, it's not going to give you the entry and the stop loss and all that stuff. But in terms of just general direction, definitely like 70% hit rate. Still, it's still definitely winning more than it's losing. Especially when they line up like that. But what I'm doing over here, the coin flip is just going to be extra. Or maybe we should actually journal for that. We'll start journaling for the coin flip as well. But for right now, both of them are like the same thing. You know, if it's bullish here, then it's bullish here as well. This is heads, bullish. Gulak cards, bullish. So the same way here it says tails, sells. And then this also said bearish. So you can also just see it. So we should just do this. I'm just going to do this. And I'm going to do this. Oh no. Why is my screen keep disappearing? Yeah, this thing's about to melt. It looks like it wants to melt right now.
Bomba.
You're gonna see sometimes when the move is really good, it spikes through these levels really fast. Sometimes when the move is really good, like there's sometimes in the market where it's like a really good move, you're gonna see price complete. There's sometimes I can't even catch the move because it does it too quickly. Like there's some days where price is trending like this, where we're down like 0.40% plus, and I see a beautiful entry, but I can't even get in with the confirmation because it just does that. So let me see what's gonna happen here. We can start breaking below these lows because we're anticipating a continuation. I think today could be a bearish day. But you know, that's what I thought about yesterday, and yesterday still flipped, which is insane. The candlestick still flipped as we got into the New York Open, and the previous daily still managed to close bullish. What do you think about a long investment in the S&P 500? Yeah, I think it's good. You know, the stock market is a lot more stable. It's not as volatile as foreign exchange. So the stock market is more stable, steady gains. But obviously nothing on this channel is an investment advice or tax advice. It's starting to break the lows again. I think it's a pretty good move. Pretty good continuation. I'd love to see it move down. I think that would make the most sense, to be honest. Oh, if I was gonna get in? If I was gonna get in, I would love to get a break. So it's breaking right now, and my stop would be maybe a safe stop loss above here. Just to be on the safe side to catch the move. Because I'm anticipating what I want to see is like a full continuation from this area over here. Or maybe it would be entry would have been here. Oh wait. Okay, let me see. It's a bit hard to do it now in hindsight because I see, let's see. Because this would have been the main wick, but I see we created one low. So this is already not looking too good because it's coming down and not breaking this wick. It took a while to break that wick. So I think the best entry would have actually been here because that's a bit more stable. Initially, it would have been here if candlesticks would have already started coming down. But it started trickling. You see this trickle? I don't like it usually when price is trickling like that. Then it broke here. That was a candlestick which actually gave a good break of these lows. So let me see it from here. Yeah, it would have been that candlestick right here. But you see it's trickling. It's trickling to the downside. So it's quite a bit annoying. I think I would have actually waited for these lows to get broken right here. That would be more of a solid approach, in my opinion. And then anticipate price can continue moving down bearish. You could opt for 16 pip stop just above this area. As well, if you wanted to tighten up the stop loss. Or if you want to be extra safe, just above maybe this zone. But I also think just that resistance there should also be valid. Because if it breaks these lows, it really has no business coming back up to retake 33.66. I also got nice little SMA confluence here too on the 5-minute. So 5-minute looks clean. Maybe HDF. Candlestick on the 30 doesn't even... It barely has a bottom wick. Really tiny bottom wick here. But like 1.1 pip. Oh, we got new hourly. Okay, yeah, true. This is creating the hourly highs. Potentially creating hourly highs before you get hourly lows. Oh, that's also a really nice confluence. Because once the hourly creates the top wick, reflips and break the previous lows, you'd be expecting that price would continue moving down. Or is anybody planning on taking a buy here? Anybody in the chat who's taking a buy here? Everyone looking to take a buy here? I think if this thing flips, it will look really good for a sell. Sells for you? Yeah, get those hourly highs and then come down. At least get a push, you know, especially off a higher time frame like the 1 hour. That should at least do like 20 pips on the next push. But it needs to get through 33.64. Yeah, daily is down 0.40%. It's quite nice to see that. London today and yesterday also gave us some kind of follow-throughs. These ones were coming in at 440. And this one is coming in here around like 410. So yeah, it's really nice to see London doing. Beautiful sell-off here. Expecting the same thing to happen here too. Because it kind of happens like clockwork, you know? Like sometimes New York sessions are just going to be moving up. New York session is just going to be moving up. And then we can see what the London session's been doing. And just see the patterns in this before it's too late. Because you see, like, this just like the... This is like something you always want to anticipate these patterns before it's too late. Because a lot of people only catch up to them when it's already like at the end of the week or something. Previous 1 hour was a big dip. Yeah, like that's why I got 6% over here. Is because I saw the pattern 2 times. I saw the pattern 2 times and I was like, okay, I'm going to hold my trade then. Because now I took it the 3rd time and guess what? I was right on time. Because you know, past that 3rd time, it's going to be sometimes more tricky. It's going to be more tricky because of 4th time, maybe, you know, 4th time, you don't really get it 4th time. It's like the same thing when you take a trade during the London session. Let's say you say 1 swing entry. Awesome. Win. 2nd win. 3rd one, bit of a riskier, but it's also like you can expect to be a win. It gets more tricky now once you get to the 4th one. When you see your setups, I mean, happen back to back. Correct? You're going to see 1, 2. You're like, oh, wow, this is actually working. 3 times. Now you've hesitated too long, you know? Now you've hesitated too long. Now you're thinking, okay, now I'm going to take it. After you've missed all these opportunities, now you want to take it. Then that's when you take the loss. Because the market doesn't like hesitation. The moment you hesitate, the markets it doesn't like this. Some of my losses come from hesitation. You know, like yesterday's loss, that came from hesitation. That came from, if I took the trade, that would have been a break-even trade. Close to hitting my profit-taking mark. But I hesitated. Today's trade, look at this. No hesitation, straight profit. So you're going to see the pattern. These things happen. You're going to see that typically tends to happen. A lot of my winning trades, I don't hesitate. They're going to be winning trades. Did you journal this last trade? No, not yet. I'm going to journal it. And an impulse, what's better, being faked out or missing the impulse move? Man, I think the best thing to do is, if you're looking at an impulsive buy, don't wait for price. Don't impulse buy when you know there's a bearish momentum. Because what's going to happen is, if you take a buy and you start having drawdown, you're going to wish you had waited. Because then you're going to use this as a fake out confluence. Because clearly the daily is starting to move downwards. So you don't want to be in a situation like this. So I would be okay with even missing any buys over here. I'll be okay with missing buys just so I can cash the sells. So these are those times where people ask me, like, how do you avoid a fake out? This would be the best way to avoid a fake out, because you know there's bearish momentum in the market currently right now, and the London is finally moving somewhere. Could be faking out here. Just took out some highs. Could very well see this thing reflip from this point. Breaking 33.67. Are you still in with 50%? What tool is that I use to journal? That's a free journal you can download in the description box. Just request to view it. Here come the sell continuations. Just need to get through that wick. Markets are cooking, guys. Gold is cooking right now. The next distribution round is coming soon. You know, people get paid from these moves. So it's not always the case that we're always moving. So it's like you get a bit of an auction over here, you get paid out. Don't know if there's only sells over here, but then you get paid out. Now it's like in the next area here, it's waiting to pay people out. That's the way I think about markets in terms of human psychology. I don't think just in terms of what the candlesticks are doing. I just see like a bunch of monopoly men sitting over here, and they're on a desk counting things. And then we're about to get the auctioneer come in now. He's gonna come in on his podium, and then they're gonna start auctioning with his little ham over here. And you got a bunch of monopoly men sitting here. So yeah, we still haven't yet had the outcome yet. So it's all a waiting game. Do I hear 3363? 3363? Yeah, so take profit here, 3363. Do I hear 3361? 3361? Yeah, okay, we're going 3361. All right, nice. Do I hear 3360? Do we hear 3360? And then, you know, it's going to keep going like this until the market decides to move. And then when it moves, it will move down to where the auctioneers had their bids. Then it's going to come down here to like, you know, 3360. 3360, and then we're going to start the auction again. Then we're going to start here. Do I hear 3364, 3364, 3367, 3337, 70? And then, you know, price can move up. And it's going to be the same thing again. And then maybe price can move down. Believe it or not, chat, it's not as far-fetched as you might think it is. Think I'm joking? Look at this nice little liquidity spike over here on the 15-minute, taking out the previous highs. 3350, please. All right, so I hear 3350. 3350 sounds like a pretty good one here, because that's going to be at the bottom of the range. I would say 3350 looks good. Yeah, we just need to, you see, I think now the wheels are spinning over here a bit. Just need to get through that wick. Then we can see price start to head down here. So hopefully Bruce Wayne doesn't walk in at the last minute and says $100 million, 3370, and then the crowd's gonna be shocked. Everyone's gonna be like, gasping. And then, you know, Bruce Wayne comes in and the guy says sold for $100 million, and then you get a candlestick move up like this. Yeah, that's the only thing to watch out for there. Hopefully he doesn't come and spoil the party, because I think a lot of people want price to move down here. What do you think about 3351? Is this too much? 3351. No, I think this is a target that price can definitely look for. You know, I think, you know, at least let's say, so it's not too greedy here, by 3358. I think, you know, 65% of this overall range, but this is definitely a higher time frame range. So if we break that wick then to 3358, we got about 66 pips. You think Bruce Wayne is getting his checkbook out? Yeah, Bruce Wayne is like the Bogdanov of the market. Yeah. Because, you know, it's like every time the market fakes people out, 100% people were in those positions. It was faking them out to fill some other orders. So you could imagine the kind of surprise that people feel when price wicks you, or even like when you take a trade and you get wicked out and immediately it goes in your direction. So if you're taking like a sell and your stop loss gets hit, then immediately goes in your direction. Or like you take a buy, let's say, and then it immediately shifts against you. 100% people have been caught in that position, and it was more profitable for the market to do that. Otherwise, it would not have done that. It would not have come up here to re-break these wick highs just so it can only reverse. So it must have been, you know, it's a conflict of interest, because the market needs to balance itself out as well. So it can't always have the perfect kind of structure where you can avoid all the fake outs. Sometimes there needs to be some sort of mitigation in the market so it can continue moving in your intended direction. So it's like, you know, the market has one job and we have one job. So the market is not your friend. So be very cynical about the market. That's why even though you have a profitable strategy, you're focusing on 1 to 2 trades a day. You know, you're not focusing on over risking, over trading, even with a good hit rate. You don't want to start risking like, you know, 7%, 10% per trade, even if you got a good hit rate. You always want to remain on the cynical side of the market because the market is not your friend. Even when it seems like it's your friend and giving you all these win streaks and all these profits. Tap me out, then ran. Ooh. But you see right here, this is definitely a consolidation. So we have to wait for the market to pick a direction again. So a lot of waiting involved. 90% of the time is waiting. You got small distributions and then waiting. And then maybe we're going to get another small distribution and then waiting again. The problem is a lot of people get stuck in these areas. You know, it's the worst place to get stuck in. Got a new 65.8. Yeah, this area is very difficult. Wednesday words of Wood's wisdom. The market is a business partner that you don't like personally and don't trust, but you make money together, so you get along. Oh, very well said. That's exactly the way I was feeling about it as well. It's like you get a business partner, you do very well together, but you know, when you're both sharks, you can't fully trust each other. So you always gotta have some sort of insurance. You know, like in the market, you always gotta have some kind of insurance. Your insurance is, first of all, your stop loss. So if you're wrong about the trade, then you want to be exiting when we start breaking key area of structure. And then also psychology is your insurance, because after this, you know, after this, it's all down to psychology now. How are you going to react to it? You understand? Like, are you going to take the aggressive route or are you going to take the patient route? It'll be the same dilemmas you'll face in business, whatever businesses you have. You'll have a situation where your stop loss will get hit. Maybe you lose some money and you're going to have to make a decision how to approach this now. So I think, you know, trading teaches you a lot. It's a lot more of a reflection on who you are as an individual, more than just it is your strategy. A burst Wayne bid coming in between 33.63. Oh, 33.63 and 33.61. At least if we could even come down, that would be nice. But you see, now it's kind of struggling here. It might even want to take out some previous sellers. Because remember, we got some sellers here. It might want to take out some previous sellers first and then continue moving down. No, distribution. It looks like some kind of distribution is currently in play. See how it's coming close to this wick? Slightly broke above it. That's why I mean how you can avoid a fake out. Remember, Shao, you asked me how to avoid a fake out? Don't take the buy, because you can see that price is coming down. That's how you avoid a fake out. See, this could be a potential fakey right here. Still down negative 0.40% on the daily. Doesn't mean it will fake out completely necessarily, but the question is, if you take a buy like this and then you have a situation like that happen to you, like, do you feel good about this? You know, if it works out, you know, beautiful, it worked out. But would you feel good about it if it actually started to move down like this? You know, very well knowing how price has been moving previously. Especially because, you know, some people are looking to hold them for longer. So is looking to hold for longer. Are you comfortable knowing this? Those are questions when you're working on holding your trades. Obviously, you have to ask yourself, because a lot of people are trying to get better at holding trades. So that's gonna be something that's gonna definitely happen, and you gotta ask yourself whether, you know, that gut feeling will come in again. Fake outs hate you and avoid you. Nice. What's your trading strategy? Price action mainly. Price action with a bit of imagination. But usually I'm looking at candlesticks. There's certain ways that markets move. I think the best thing you gotta do is watch this video here that we uploaded. Go and watch this video over here. I'm gonna try find it. This video here on trading psychology. Just go and first watch this video. Go ahead and first watch this video. This guy is quite funny. Penguins. Yeah, I think it's gonna be a really important video. It's kind of long here. It's like 34 minutes. Oh, dump it. See this? How to avoid fake outs 101. We spoke about this. You know, we spoke about this before it even happened over here. What I say, chat. This is not coming from I told you so. This is just coming from what we always talk about. You know, it's like really good tips over here that we've given today. Give it today. Right off the bat with a... It's always good when the market gives you an opportunity to share this value, because we don't always get the opportunity to see it in real time. So I think it was pretty nice here today. We'll see iPhone in the bias and avoiding fake outs. So it's really nice. And, you know, that's a whole idea behind the simulations. When we do simulations, at least we could give ourselves the option to experience certain things in the market. Because I can't prepare a simulation. You know, I don't know what the lesson is going to be on the day. So when we do a random date and then we do the simulation, we just have to see what happens, what the market gives us, that we can learn from that. Because, you know, as much as you have your concepts, the context in which you're taking the trade is always like somehow slightly different. Like you see this trade over here, if you try emulate this trade here tomorrow, you could get close to it, but the context might be a bit different than what we had here today. And oh, look at this now, we're breaking the lows. So now we're getting the small little liquidity grab confluence above here by 33.67. Beautiful. So you see, if you're patient, you know why this happens here? Is because people sometimes, and this trade can still lose, by the way, but I'm just giving you a psychology. If this trade, if people were, let's say, looking for sells, but you got some people who are always rushing. You know, they're always like, man, these sells are not coming in, so let me just take these buys because I could get these buys now and maybe I can get a sell later. So it's going to happen to you sometimes, or you're really patiently waiting for the sell and you actually had the right idea. But just because you're not patient enough, you ended up taking the buy, you're losing the buy now, and you're seeing a potential sell playing out. So, you know, this can become very, very dangerous over here because you'd rather give the sell a chance and then see that through, because what this opens is a chance for over trading. So you take a loss over here and then you take a sell and then you take a loss over there too. So that's what you're also trying to avoid. So this is the market psychology. This is how the market thinks. You know, just so you know, because these are pretty key areas over here. These are definitely areas where people are going to be getting in and out. That's why I said fake out above here and continuation if we can break these lows. So this is all market psychology right now. This is what it's doing. Psychological warfare. Because look, now the fact that I pull up like this, it doesn't necessarily mean there's going to be a losing trade either. You know, this could just be kind of squeezing out the sellers, people who are not entirely sure about their trade, and then to only move down later. So you know, when you take a position, the best thing to do is just already have a plan of what you are going to do. You know, so you're not like a feather in the wind where you take a sell here and the moment you see reds, you already start panicking. You're like, oh damn, you know, now I'm not getting my instant gratification. So I'm gonna be like, holy man, this is a fake out. And then you see it like does this thing and then it makes you feel a certain way and then look, it goes back in your favor. Correct? Like just know that the market's gonna do this. So I think it's as we say, it's better to be a warrior in a garden than a gardener in a war. So if you're coming on here thinking that the market's going to be your friend and give you all the easy trades, then, you know, it's going to be opening you up to manipulation like this. Waiting too long, counter bias trade, and then you take a bit of drawdown, you get a bit fearful. You know, just give it time to play out and then manage your risk if it's really struggling to move down. But, you know, if you wait for the sell, I think it's a pretty good idea here still. You got that 8 SMA confluence holding down the 5-minute candlestick. We still got that beautiful range to the downside. I mean, even if you look at this, does that look bullish to you? Does the way price action, does it really look bullish to you? Because, you know, a lot of people are looking at the same candlesticks. It doesn't matter where in the world that you're watching. You could be watching the same market in space, but it's still the same candlesticks. You know, it's like, what do you think people are feeling when they see like a certain situation like that happen? At this current moment, you know, it's all about making the best possible decision that you could have in that moment. You know, it doesn't mean it's 100% right, but you're making the best possible decision. That's all trading is. Every day, you're trying to make the best possible decision of the moment that you're in right now. Because look, if you start like speeding up the candles, and let's say you start to see structure go up against you like this, and you remove those candlesticks, you still made the best possible decision you could have at the moment. Because when you were taking your trade, it did look more like it was supposed to go down bearish. You know, especially after that liquidity grab. That's all it is. The problem with hindsight is, you know, hindsight is 50-50. So in hindsight, you would always find a reason why maybe that was not the best decision. So you have to, when you take your trade, you have to be somehow convinced that you made the best possible decision. So even when you lose, you win. Waiting too long only to enter shorts. Yeah, even when you lose, you win. You gotta have that mindset. Because how else do you build confidence? You have to be sure of what you're doing. The Bruce Wayne private jet is taxing the runway. Yeah, Brucey, can we push this thing down here? But it's quite interesting, you know. The initial position here is still surviving, so it's still paying out. I think it might have gotten some people. Maybe trying to reach. It's trying to reach as well, but initial position is still safe over here from when I got in. It's all about patience, you know. Like sometimes these bumbleclot type of trades, they also take time to play out. They sometimes take a little bit of consolidation before playing out like this. It's a beautiful thing because look what I'm going to do. I'm still going to take my screenshot over here and then I'm going to post it onto my trades taken. And when I look back at it, I'll say, oh, that's nice. That's nice. The trades run a lot more. You know, I don't have to catch the move. Like, I don't feel bad about missing the move. I was happy to see the moves play out like this. So when it comes time to hold, I'm going to hold. Look at this. Same thing. Same thing. Position still surviving over here. Clean range on the downside. Breaking their accumulation. I think that makes sense. You know, that's not a gamble. That's not a gamble because we've seen what price has been doing. If the candlestick started to move up like this, I would say at that point, there was nothing you could have done. You know, you took the best possible decision you could have taken for a trade, and it was just a probability that that was going to be a losing trade. But now look at this. Look at this, price is going in your direction now, just like it makes sense that it should. You know, it doesn't make sense here if you're looking for a buy after everything we've just been speaking about. And then you see something like this and you take a buy, that's a gamble. You know, if you won that trade, you won that trade because maybe you just got lucky. But if you're reading the price action, it really did not make sense for price to move up from this area. It made more sense. There was a higher probability that it would have moved down. That's all it is. How come you never hold your trades, Tetra? Is your style more scalping? Do you ever think you will swing? I do hold my trades. I don't always hold them, but I hold them from time to time. Just think about it yourself. If I'm teaching you this and I'm showing you continuously screenshots of all these trades that we take, all accounted for with the signals and everything, why would I not hold the trade myself? Like, if I see it happening over and over again, why would I not hold the trade myself? Of course I hold it. I hold it from time to time. My goal is 20% at the end of the month. So it doesn't matter how I get to 20%. I can get to 20% scalping 1 to 2% per day. I could get 20% by, you know, maybe if I'm 15% on the month and I have one more week left, then I can hold a trade a bit longer for like 5%. Whatever the case is, I just need to get to at least 20% per month. You know, for me, it's like I could hold or I could scalp my way there. But that's my target for the month. It's 20%. I think it's good to have these sort of targets, but not like have that affect your trading, correct? But that's what I want to see at the end of the month. I want to see 20%. Because, you know, I'm also trading a pretty big account now. So like any small moves for me is more than enough. Yeah, I mean, this is a question about more. You're asking me a question more to do with human greed. It's the same reason why people ask me, oh, why don't you trade $1 million of funding? Why don't you increase your risk? And then they send me spreadsheets of, okay, so with your strategy, if you keep scaling like this, then you're going to make this. Like, that's all well and good. You know, that's all well and good. But that's all only coming from a place of greed. And it's never going to be enough. You know, even if I held this trade this much and it still kept running, there's always going to be some kind of question about why don't you just keep holding longer? Or why don't you keep scaling more? You know, I've been humbled. I've been humbled to the point in the market that I'm just happy to end my month with 20%. That's the sort of like emotional damage a trader endures. It's a sort of humbling a trader goes through, that even in a situation like this, and you see it happen over and over again, you're just happy to end the day profitable. You know, so for me, I'm quite humbled. I'm quite humbled. But I know if I need the extra gains, I will hold my trade. Some of you don't believe that because you're still operating from an area of greed. That's why. Because you can always make more, right? As soon as I got out, it dumped. Oh. And it had so much room. It still had so much room over here. It's pushed down an extra 20 pips. But, you know, it's pretty good. At least you got out. You secured something. That's a lot better. Because at the end of the day, even if you got a whole range like this, you just want to catch even half of that range for me is enough. Even if we're talking about price action wise, even half the range is enough. We don't need the full range. You know, in the market, it's always better to under-analyze than over-analyze. So if you got a point A here, and you think it's coming here to point B, it's better that you secure something in the middle like this. Because this will play on your psychology. If you have price keep doing this, passing where you should be securing, and then reversing like this, that's going to cause some turmoil for you psychologically speaking. Remember, trading is a long-term game. So for me, the most stable approach is to take something out of the market every day. That 2% I can try get to, that's what I'm trying to take out of the market every day. It's more stable on the psychology, because you're going to have times where you see these examples that I'm showing you. You're going to have times maybe I'm not getting them as frequent as I've been getting them. And you know, and during those times you can still make money. But if you see it happen over and over again, this is a pretty good time to maximize gains though. I will admit that part. That if you're really looking to lock in and maximize gains, it's a good time. And that's what I did last month. End of the month here with 51%. Look at that. 51%. Now, was I holding every trade? Clearly not. Look at this. 2%, negative 1.22%, 1.93%, 2%, 1%, you know, a cheeky 3% here, 1.79, negative 2%, you know, 2%, 1.9%. This all adds up. 51% at the end of the month. You don't have to hold just so you can make your gains. You just have to show up. But you know, this month I took a lot of trades though. I took about 51 trades this month. But I did have one really good run in there too. This was that 6% trade. But it's because I also saw the volume, you know, like since July, the market has been really giving these really nice pushes. See, we got a streak over here. Really nice streak of trades. Only took like 2 losses in 21 trades over here. So you see what I mean? There's more than one way to skin a goat. I think a lot of people are too fixated on this idea of risk to reward too much. All these trades here were like, I think an average of 1-to-1 risk to reward. These were not really anything crazy over here. All the average of 1-to-1. But at the end of the month, what counts the most is not your RR, it's your percentage gains. Your what have you taken out from the market? You know, that's why we say pigs, buyers make money, sellers make money, and pigs get slaughtered. Usually it's the pigs who are chasing the risk to reward, because they always get price reverse on them and they don't secure anything. But buyers and sellers get paid in the market. You must just show up and take what the market gives you. And if you can effectively do that, then it adds up at the end of the month. Miji, thank you for the sub. Are you risking 1-to-2% per trade? Yes. My trades are usually between 1-to-2%. 1-to-2%. And of late, I've just been securing 16 pips. Like on all these trades, I've just mainly been doing 16 pips, 16 pips. That's the maximum amount of pips that I'm willing to see price move. So I can secure something, you know, at least 16 pips. Of late, so yeah, I think it's pretty nice. So far, also this month we've been seeing a lot of volume. So it's, yeah, I think it's good. Except this morning. This morning couldn't get my 16 pips. I couldn't even get 8 pips. As soon as I got out, it dumped. Oh yeah. How much did you secure percentage-wise? Can you see what I mean? Like, it's a small auction and then, you know, it's the same thing again. You see how it's done this? And now look what it's doing again. It's like, it's only a small part of it, you know? That little distribution is we would love to have a bigger one, but it's like a small part of it. See, you had one auction right over here. Distribute. Small auction here. Distribute. Getting another small auction here as well. So maybe it might even give a chance for some buyers to have a small retracement back into that zone. Or if it like breaks the lows and then continues to move down. See, majority of the time the market is consolidating. It's just moving sideways. So you must break the matrix. You must break your own biases somehow. So you can start seeing the market in a different way. Because we're all looking at the same candles. But if you are not watching this stream, you would have a completely different idea on markets. You would be thinking about this in your own special way, correct? So you need to break the boundaries. You need to somehow find a way to think outside of the box. And I think, you know, that's always great for experience and improvement. Volume isn't prime though. It's slowly coming down, slowly but surely. This candlestick does not have a top wick though on the 30. But yeah, candles are still slowly but surely coming down. You know, it's the same thing that I said in my reel yesterday, that anxiety is making you miss a lot of profitable trades. Because you're thinking that surely it can't push down anymore. And then it keeps moving down. And it's like people who are always trying to counter trend, they'll be surprised that markets can keep moving in one direction way longer than they think. Look at this. Price is selling off. It's selling off over here. Look at how many times you could have missed this move, and your anxiety is telling you, oh, I can't zoom in here. It's telling you that the market's already bottomed out. Correct? But we still took a sell over here. And then look at how much further it even pushed. You know, sometimes your anxiety is lying to you. You must just trade the markets for what they are. They're very stoic. They have no emotion. Why must you have all these emotions when the market has zero emotions? You know, you must learn how to be emotionless. I've moved my SL to the top wick of the 5 before the 30 open. Oh, nice. Come on, Bogdanov. Dump it some more. Do you think it will dump? It is in the process, sir. It's already dumped from our initial area. Right here. This was pushed down 20 pips. Smaller reaction. Little retracement. Maybe scared out some people. And then continue to push down. Now it's setting up again. But don't get greedy, you know. If you're taking like so many back-to-back trades, it's also not a good habit as a trader. And that's the thing about streaming and trading, is someone always wants a trade. It's never enough. You know, we can take one trade here, we can take another trade here, but it's never enough. So you gotta get okay with like pivot trading as well. I think it's really nice. So whenever I'm not actually taking the trade, I'm always doing it like this. I'm just pivot trading and thinking, okay, how could I have gotten in and that sort of thing. Citibank boys are waiting for Wall Street fellas and Trump. It's almost time to bounce. See if it actually gives a beautiful continuation there. Thank you for that 100 likes, guys. Appreciate it. Slow start in the month for me, to be honest. I'm only up like maybe 2%. This is Wednesday. And candlestick is breaking below support. Can it move down? Can we get a follow through? Spartans.
Spartans! What is your profession?
Oh, what a freaking dump that was. A 1 minute candlestick push here, like 8 pips in literally less than a second. Holy. Yeah, there's a second round of distribution. Man, these monopoly guys here, really pushing the market down with their barnacles. Pushing the market down with their barnacles. Wait, didn't the Monopoly guy have a barnacle? Or is that like a Mandela effect thing? I would have sworn this guy had a barnacle. Where's his barnacle? Some weird operations happening here. They say the Mandela effect is happening because of what's happening, because of what they're doing in Sen with the Hydro Collider. It's like how some people can remember certain things very differently. I always remembered the Monopoly guy with a little glass over here. Or like some people could swear that Nelson Mandela died on a certain date, but it's like a different date. Like he lived up until I think 2011, but some people swore that he died way before that. Or another one is this Happy Cow cheese. I used to eat this cheese when I was a kid, and I always remembered Happy Cow having like a ring on the nose. Yeah, this one right here. I always remembered it having a ring on the nose. And I think there's also one like Tom and Jerry. Tom and Jerry, Nelson. No, it's called Nelson Mandela. Tom and Jerry. Which one was this? There's like a bunch of these things. Like even like Pokemon. Oh, Looney Tunes. Yeah, I always remember spelling Looney Tunes with Toons. That's also how I remember it. You know? But now it's like Tunes. Yeah, that's how I remember the Monopoly, man. I always had like a barnacle here. So like Kit Kat. Or even Pikachu. Didn't Pikachu have the black thing on his tail? And then it's like, there's nothing over there. How the hell is that possible? You know what the Nelson Mandela effect is like? It's like sometimes when you look at the charts, yeah, you're doing your forward testing, right? Oh man, look at this beautiful distribution over here. Yeah, when you're doing your forward testing, the candlesticks look in a certain way, and when you come back at the end of the day, what I've noticed is sometimes the wick is a bit longer. You know, the candle maybe didn't really fully close that support, but the PA actually, it shifts a little bit. It's kind of like, you know how in Forex Factory when we get our revisions, when the numbers get revised, it's kind of like that. You look back at it and then like something changes. It's like the Bernstein Bears. I think this is like spelled a bit differently. A mass misremembering. Yeah, mass misremembering. It's quite interesting because that also digs into what I was studying with anthropology as well. And you know like how natives always talk about the other world, and it always comes from like a feeling inside the body where you feel like there's a presence of something else, and it can be a mass shared thing. For example, if you're walking in the dark and you believe in ghosts, you can actually simulate an experience for yourself where if you freak yourself out enough, you can start to sense certain things. And you know, if you're in a room of people, you can sometimes have that shared feeling, like it's an energy thing, and it's quite interesting. It's quite interesting when you think about it from that anthropological lens. So yeah, this Nelson Mandela thing is also something else. I'm from South Africa and I don't even know if Mandela died in prison. Yeah, but wow, this is such a good sell here. We got a 14 pips stop loss. Holy, it's like all the plays here have been working out today. You know, first we started stream off with some really nice swing entry models. There was one prior to, actually this was at the London Open right here. Beautiful little swing entry model to the downside. You got one right here towards the upside. Nice. And then you had some accumulation break that we took right over here. That's 1, 2, 3. And then there was one right here, 4, 5. So all the setups played out here beautifully. Man, this is insane. Look at this price here, just completely nutting. It's heading down towards, that's why I've been waiting for this bias, you know. It's pretty nice. It's heading down towards 3350 over there. So this is gonna look really nice in our journal. So next time we have new people on stream that they can look at this and say, wow, how does he keep doing that? I'm calling reversal from S4 to 48. Man, this is already melted here 100 pips. But you shouldn't feel FOMO, because if you can do it once like this, you can do it again. That's the whole idea behind building a skill. It's because no one can take the skill away from you. People can take money from you, but they can't take your skill away of generating that money. It's like how Jordan Belfort went to prison. You remember Wolf of Wall Street? He went to prison, he lost everything, but no one could take the skill away from him, the skill of speaking. So he came out of prison and, you know, he did pretty well for himself. And then we got Samuel Anuha. Samuel Anuha went to prison in Dubai. The guy's out now. All those people praying on his downfall, guess what? The guy's out. And guess what? He's out with a skill which had made him millions of dollars every month. That's the type of person that you need to be. That no matter where they put you, when you come out, you're that good. You're that good. You can make it all back. So, you know, Samuel Anuha is a guy who does drop shipping. So this is him. This was his first picture out of jail, out of prison in Dubai, in his Rolls Royce Cullinan, back and ready to do the same thing again. Man, it's crazy because he could have gone away for like 20 plus years. You know, so man, there's a certain humbling that comes from a situation like this. I'm sure the way he's gonna be before, you know, he was kind of pretentious, like he was on top of the world, making a lot of money drop shipping. You know, it's from the Netherlands. And now he's gotten a humbling. Now this type of humbling, it only makes you stronger. You know, because whatever this was before, this is the devil's work. You know, this is all the devil's work over here. It's only when you get humbled, now you can start moving correctly. And I think, you know, that's a beautiful thing. That's a beautiful thing about the markets as well. You just, you know, sometimes you had these really nice runs and you feel like you're on top of the world. And you're like, man, I can't lose. I'm catching all these runners here. You know, I can't lose. Look at me. I can't lose. You know, I can't lose. And then you get the humbleness. Why don't you hold your trades? Because you keep getting these trades, you know, I can't lose. And then you're going to get the humbleness right over here. And then you're going to say, oh, damn. Oh, damn. Okay. So this is not a good feeling over here. And I think this shift is a beautiful shift for a lot of traders. You know, once you get to that point in your trading journey, that's when you start to see real progress, real sustainable progress. And that's how generational wealth is built. It's built off the, you know, it's built off the backbones of humbleness. In the end of my career, I want to create a strategy that works well in the beginning. Then I want to use it, engineer liquidity when I open my institution. Oh, nice. Yeah, I think that's also a really good goal. Humbling, but not in a humble way. Sell that sheaf. Finally got a runner. Oh, nice. I got Salt Bay here. Yeah, I mean the trade. This was a very nice trade. You know, that was a beautiful little 1 to 3. 1 to 3. And also distribution from the first entry, the second entry. So don't leave here today with just the trades. At least you got some really nice market conditions today to explain a few of these things. So I think that in itself is invaluable. Entry at 67. Oh, nice. Yeah, but I think I'm going to end off the stream here, guys. Really, I do appreciate the likes. Appreciate you guys tuning in. And I will see y'all tomorrow. Adios.
Pull up when you